Hey everybody, Smart Silver Stacker here. Hope you're doing well. So the price of gold just smashed its previous all-time record high. We're looking at the chart of gold right now, and you can see right now gold futures on the COMEX trading around $2,470, smashing through this blue line, which by the way represents the previous all-time high. And that's not just the high close. That is the previous intraday all-time high. So if we close here, and right now it's about 3:19 Eastern time, if we close above this level, it will be the record all-time high record close for gold. Now, in today's video, we're going to discuss what is driving this action, the news that is driving gold to break out from its months-long consolidation pattern that you can see I've drawn on the screen here. And this is a very bullish chart for gold, but also I want to talk about some fundamental factors that are likely to drive the price of gold much higher as we move forward. I mean, we are really just getting started with this rally, but let's talk about what's driving this. And, welcome to the live stream if you're new. Welcome if you're a returning viewer. I appreciate you joining. Do me a favor, smash that like button. Subscribe to the channel if you haven't yet, because things are about to get very interesting in the gold and silver markets. So starting off, let's examine this. This is the CME FedWatch tool. Now we're looking at the target rate probabilities for the September FOMC meeting. And one thing you might notice here is that the current rate, which is federal funds rate of 525 to 550 basis points, is no longer listed. Now that's because there is, as of today, a 100% chance of September rate cuts being baked into the cake. So that is partially what is driving gold prices to new record all-time highs. And trust me, if they do begin cutting rates in September, this gold price is going to be heading much, much higher. Now, interestingly, if we go to the July rate probabilities here, you can see there's about a 93.3% chance that rates are going to stay the same. That's at the FOMC meeting in about 2 weeks, but there's still a 6.7% chance of a rate cut, a surprise rate cut. Now, look, that, again, is not a high probability, but because markets are only anticipating a 6.7% chance of that, and that's what's getting priced in, if we do, for some reason, see a rate cut at the end of July, price of gold, the price of silver, they're going to explode. So that's definitely something to keep an eye on. But let's talk about what Jerome Powell said today that is causing markets to price in a 100% chance of a rate cut. So this is Jay Powell here. The headline from Financial Times: Jay Powell signals growing confidence that U.S. inflation is moving towards 2% target. Speaking at the Economic Club of Washington, this is what Jerome Powell had to say. Our test has been for quite some time that we want to have greater confidence that inflation was moving sustainably down towards our 2% target. And lately, we have been getting some of that. Now, we did see that in the weaker than expected CPI data. That caused a nice little pop in the gold and silver price. But now, following these comments, markets are really beginning to pay attention to this increasing probability. Now, keep in mind that it was just last week during congressional testimony in front of the Senate Banking Committee that Powell said you don't want to wait until inflation gets all the way down to 2%. If you waited that long, you probably waited too long, because inflation will be moving downward and would go well below 2%. Now, I believe that if they cut in September, inflation is going to rear its head again in a very big way, but that's not going to stop them. You see, the reason they have to cut is because there are all these brewing crises in the financial system, regional banks sitting on huge unrealized losses due to rising U.S. Treasury yields and also lower demand for commercial real estate that is a result of higher mortgage rates. So all of this is tied together, but they're going to cut in September. At least it's certainly beginning to look that way, assuming we don't get any major upsets between now and then. So you can expect more easy money to come. Now, one thing that I think is worth keeping an eye on, this is the Market Watch, economic calendar, and coming up on July 26th is going to be the PCE index data. Now, this is the inflation measure that the Fed it's their favorite one, right? This is what they like to look at the most, the PCE index. And it has already fallen, core PCE, to 2.6%. But if we get a weaker number than that, if we see a decline in the PCE, especially one that is below expectations, then the probability of a surprise rate cut is going to rise significantly. And someone in the chat here asks a good question. It says, explain why metals will go up if there is a rate cut. Well, if there is a rate cut, that is going to decrease the cost of credit, right? Rate cut, interest rates are the cost of borrowing money. If you cut interest rates, borrowing money, it becomes cheaper. That means there will be more borrowing. That means that there will be more dollars chasing the same basket of goods and services. It means inflation is going to be moving higher. And there's going to be a lot of money sloshing around to pump up the value of many assets. However, I think that when the degree to which the Fed really is forced to cut rates to bail this economy out, the true picture of what's going on in this economy, because I mean, it's not the strongest economy in the world like we've been told, right, by the political elites, the central bankers. It's in fact a very pressured economy where we have enormous fiscal deficits, rising cost of debt. We're paying over $1 trillion now on the national debt. And the bottom line is they're going to have to print a lot of money. And when they slash rates, they cut rates, it makes them easier to do that. It makes it easier for the government to borrow more money. Makes it easier for consumers to borrow more money, and that is going to drive the cost of most goods and services higher. Someone says, I don't think rate cuts are priced in for silver yet. Yeah, Patriot Southern, thank you for that comment. I would agree. Silver is in the green today, but you know, one thing we have witnessed thus far with the precious metals breakout, the big rally that we've been seeing so far in 2024, is that gold's kind of leading silver, right? You'll see gold break out to new record all-time highs. Silver's coming right behind it. And we have actually seen the gold to silver ratio this year declining. That is a trend I think is going to continue. I mean, there's going to be volatility, of course. Silver's a lot more volatile than gold, but silver is in the green today. And, you know, also looking at this chart, this is of the GDX, the VanEck Gold Miners ETF. You can see that it also has broken out to a new 52-week high, confirming the gold breakout. Keep in mind, if people buy gold and silver miners, it's because they anticipate the price of the metals is going to be higher moving forward, right? Because they're betting that the prices will remain high so that these mining companies can have higher earnings. And that is what we are seeing today with the GDX breaking out. Also, silver miners breaking out today. SILJ, that's the Amplify Junior Silver Miners ETF, also breaking out to new 52-week highs here, a little bit lagging behind the gold miners, but when the silver price starts to move, I think that's going to change as well. And, you know, going back to the gold chart real quick, you can see it's a very bullish setup, and we're breaking out of this triangle. It looks like we're going to close at the highs of the day, which is always a good sign. Decent volume. We just broke, the MACD just went positive. You can see the histogram on the MACD here, for those of you who like technical analysis, has gone positive, showing a bullish momentum. We've got the MACD and the signal line in a bullish alignment, and the relative strength index, this is something that shows you whether an asset is overbought or oversold. When it goes north of this line, above 80 here, some people will say 70, above 70 or 80, you're going to consider it oversold, but we're not there yet. So despite the fact that gold has had a big rally today, it's still under 70, it's at 68. So we still have room to grow as far as the RSI as well in terms of higher gold prices. So it's a very bullish technical chart. I want to talk about physical gold real quick, because this is an interesting factor. There's two more things I want to talk about in this video. One is physical gold and physical gold demand, and also central bank and China specifically, their central bank buying gold. But first, let's talk about physical gold. So SD Bullion, today's video sponsor, this is where I buy my gold and silver. I want to use them as an example because one thing you'll notice here, they've got Krugerrands on sale right now for $49.99 over spot. Now you might think $49.99 over spot, pretty normal premium for gold, but keep in mind, as the gold price rises, if the premium in dollar amounts stays the same, it's actually declining in percentage terms. And this is only about a 2% markup over the spot price of gold for a physical 1 ounce gold coin. So that's a little bit lower than what we typically have seen over the past several years. I mean, yeah, there's been deals here and there, but right now the point is premiums on physical gold are low. And it's not just, Krugerrands. I also want to examine this. They've got these $10 Liberty Eagle gold coins. These are pre-1933 gold, so they're not making these things anymore. You can get one. Now, this isn't quite half an ounce of gold. It's, how much is in this? It's 0.4838 ounces of gold in this coin. But the premiums on pre-1933 gold, especially fractional gold, are incredibly low right now. This is only about a 5% markup over the spot price of gold. And even these, I actually picked one of these up recently, these MS65 St. Gaudens Double Eagle gold coin. It's about a 9% markup over the spot price of gold for one of these coins, but this is a slabbed mint state coin. So what does all this tell you? Well, it tells you that a lot of people right now must be selling to SD bullion, right? They must be taking advantage of the record high gold price. I mean, in their mind, that's what they're doing, and selling their physical gold, these old pre-1933 coins. I mean, in the past, the premiums on these were much higher. In fact, I've never stacked this stuff before because I always thought the premium over spot price didn't warrant it. But now, seeing the premiums on this collapse, I mean, I'm happy to take the other side of that trade and buy what other people are selling. And what that also tells you is it's very unique. You've got gold breaking out to new record all-time highs, and yet stackers are selling gold. So what's going to happen when gold starts getting purchased by the American public? I mean, you're going to see the spot price explode, right? Right now, it must be that they are net sellers. Now, to give you an idea of, I mean, how crazy the premium difference is, so I ordered one of these, and it's a sweet coin. It's really nice. NGC MS65. I got a 1924, which is like the most common year for gold. These specific gold coins. They minted a lot of them that year. So no surprise. I mean, it's a random year listing. You expect to get something common, especially for such a low premium. But I mean, look at eBay. 1924 MS65 Double Eagles, July 14th, one sold for $27.65. July 9th, $2,900. You go back to June. Now, keep in mind, on June 22nd, the spot price was lower. The spot price back on June 22nd was around $2,333. And you've got on eBay, sorry, let me get back to the eBay page here, one of these coins selling for $26.79. You can get one cheaper than that today at record all-time high gold prices than this person bought this one for if you buy it at SD Bullion. So again, this shows that a lot of people are coming into the market like right around now and unloading this stuff on local coin shops and dealers. And actually, I would be curious, any of you who are watching, I don't have local coin shops near me, so I don't get to visit them that often unless I'm traveling or something like that. But if you have a local coin shop that you visit, what is the supply and demand situation right there? I mean, I would expect, based on what we're seeing at SD Bullion, that local coin shops probably also have an influx of people selling. And so if you're watching live, let me know in the chat. Silver Stormy Normie says a lot of people tapped out of cash. And yeah, I think that definitely contributes to it, is that inflation has gotten so bad that people, they barely keep up with their bills, right? And so you might need cash. And I understand. I'm not criticizing anybody for selling their gold. I mean, it's at a record all-time high price. You're certainly in the green, I'm sure, if you're selling right now. It's just that, if you go to sell these right now, you're not going to recapture the premium that you paid for them, I'm sure. And yeah, Chad says we can selling now. Well, I don't necessarily want to characterize stackers who are, trying to pay their bills as we can. Sometimes it's just time to sell. But there is truth in what you're saying there, that, despite the fact that gold is at a record all-time high, it's going to go a lot higher. And I think that the people who buy now, take advantage of the low premiums, are going to be rewarded for that. But I want to talk about China as well, because China is another, the People's Bank of China specifically, is another organization. They're not selling gold, but they actually stopped buying gold back in June. And it was for May. It was reported in June that the People's Bank of China, the PBOC, had halted an 18-month buying spree. Now, if you remember, the price of gold, when this news came out, plummeted. The metal sold off on this news. Now, I mean, they've recovered all those losses since then, of course, because, we're at a record all-time high. But they announced simply that they were taking a break. I mean, they said we just didn't buy any gold in May, and people, I think, took this to mean that China's done buying gold, but that's not the case, and I'll show you why in just a moment. But also, we got news this month, so just last week on July 8th, that the People's Bank of China had not bought any gold in June either. This is the headline from Bloomberg here. China's PBOC keeps gold buying on hold for a second month. Now, this one didn't have as big an impact on the gold price. It seemed like investors were kind of shrugging it off after this. But look, what I want to point your attention to is we're at a record all-time high right now, and a lot of that is being driven by central bank buying. I mean, we know that retail investors in the U.S., at least those buying physical bullion, are actually probably net sellers right now based on premiums. But what's going to happen when China announces that they're coming back into the market? I mean, you're going to see the price of gold explode. It's just like all those Americans now who are selling thinking, hey, great, I'm getting record all-time high prices for my gold, except, when it becomes apparent that the devaluation of the dollar is going to accelerate, and also when it becomes apparent that we're facing a financial crisis in the U.S., whether it's a sovereign debt crisis, a regional banking crisis, a commercial real estate crisis. I don't know which one of these things is going to manifest itself first in the economy, but when it does, the Fed's going to be cutting even more rapidly, probably going to return to quantitative easing as well, directly buying U.S. Debt instruments. I know right now there's a lot of speculation out there on the interwebs that the Fed is already doing this. I mean, officially they're committed to QT, but we have seen a decline in U.S. Treasury yields. And what's driving that, right? I mean, who's buying it for lower yields? It could very well be that the Fed is behind the scenes doing that. But look, this is the 2024 Central Bank Gold Reserves Survey from the World Gold Council. This was released in June, and I just want to draw your attention to two questions here. This is a poll of central banks. Chart 1, what proportion of total reserves, foreign exchange, and gold do you think will be denominated in U.S. dollars 5 years from now? And the pink or purple, kind of an odd color. I'm not sure, honestly, there's something wrong with my brain. I can't tell if that's pink or purple. But this color is the most recent answers. And you can see the respondents can say significantly lower, moderately lower, unchanged, moderately higher, significantly higher. And the vast majority of them, 49%, say that the total proportion of dollars as of the foreign exchange reserves is going to be moderately lower 5 years from now. Whereas the same question, kind of in reverse, but related to gold, what proportion of total reserves, that's Forex and gold, do you think will be denominated in gold 5 years from now? And moderately higher, 66% of the central bankers responding to this survey indicate that the proportion of gold of total reserves will be moderately higher 5 years from now. So look, the central banks around the world have not stopped buying gold. They're going to be buying a lot more gold moving forward as the world continues to de-dollarize, as globalization breaks down and the weaponization of the dollar via sanctions continues. I mean, regardless of what happens in November with the election, I don't think that anybody's going to be able to repair the damage that has been done to the reputation of the dollar via, the financial weaponization of the dollar. And they're not going to remove the incentive for these foreign countries to divest themselves of their large dollar holdings and at least diversify into hard assets like gold, asset with no counterparty risk. When you start sanctioning people's dollar holdings and their ability to participate in the dollar system, obviously gold becomes more appealing. And, this is reflected in this survey. So right now, China has paused their gold buying. But what's going to happen to this chart when they come back into the market? Well, going to see a big move up in gold. Princess Dumbarton in the chart here, gold up over $100 in 13 days. Yeah, and likely just getting started. I mean, keep in mind that this price that we just broke out from was tested once, twice, third time's the charm. We blew through it. And I mean, gold has been consolidating for a while here since really back in April, since this whole thing kicked off. From February to April, we had a huge move up in gold, consolidating since then. It looks like we are now setting off on the next leg. It's very likely that gold and silver prices are headed higher from here. It's not financial advice, of course. I'm not telling you what to do. I'm just kind of sharing with you what I am doing and my view of things. But let me know in the comments down below what you think about this gold breakout. Where is gold headed from here? Is silver going to follow its lead? I think it will. And what do you think we're going to see moving forward for the precious metals? Also, if you have some reports from your local coin shops, put them in the comments down below. Don't forget to like the video, everybody. Smash that like button, hit the subscribe button if you haven't yet to get more videos like this in the future. And I will catch you next time. Stay safe and happy stacking, everybody. Smart Silver Stacker out.